Hi friends, this is Kishore. Welcome back to my channel. Today I would like to cover market index analysis and some historical stats like last two quarters market went up like anything, it's up more than 25%. So I would like to share some of the historical stats on that. And the election year pattern when first quarter ends strong. So this quarter ends S&P 500 10% up. So I'd like to share some of the patterns on that one. And monetary policy index at the end of the day, money is coming into the market or not is important. So I'd like to share one of the chart on that. And last week economic calendar, next week economic calendar analysis and smart versus dumb money, like bond market versus equity market. And my top two stock picks. So I'd like to share two stocks like looking very good to me. I'd like to share that one as well. So this is not a financial advice, just for knowledge purpose only. Let's jump into the show. So this is CN fear and greed index. It's know that it is in 71. Like last couple of months, it is in the greed and extreme greed. It never back went to the neutral. So let's see whether it is going to the neutral or not in the next month. And this weekly heat map. It's not a big week, so it's a very short week. So it's not no major moves like 10% or 15% of kind of thing. And this is weekly heat map for the ETFs. GDX went up like 5%. Like this is a very good week for the gold. It also the crypto. And this is quarterly heat map. Nvidia is up more than 80%. This is a very very big quarter for the Nvidia. It's a huge rally last 3 months. And also the Meta is up 35%, Amazon is up 17%, and also some of the financial also did really well, like JPM 18% and AXP, American Express 21%. And also the industrials did really well, like G is up 36% and ET and 29%, RTX 15%. The big hit it came to the Tesla like 32%, and also Apple is down by 11%. It's very rare to see like Apple is down by 10%, S&P is up by 10% in a quarter, and also Adobe is down 15% because of the AI thing. It hit really hard, and also the BA is down 26%. That 747 airlines, like it's having some tough time for the BA. And this is the quarterly heat map for the ETFs. So all the indexes, positive side index really did well. Only the invest ETFs not perform well because of the market went up like anything last two quarters. And this weekly sector performance, utilities went up, and also the real estate went up, which is a good sign. And communication services, technology went down. Looks like some kind of a money rotation is happening here. And this is S&P 500 up 10% back-to-back quarters in 1945 to 2024. So this is the very few occasions where two quarters up more than 10% in the history from 1945 to 2024. I highlighted the 2012 because that's an election year, and 2024 this is also election year. So in the election year, like last quarter of 2011, it up 11.15%, and the first quarter of 2012 it's up 12%, and next after 3 months it's down like 3%. It's like a kind of profit taking. Can clearly see 11 and 12% up, and then 3% down is like a kind of a profit taking kind of thing. But the year closed with the 11% up. So this year like 11.24% up, like 2023 last quarter, and 2024 first quarter is up like 10%. So we may expect some kind of profit taking here. That's a good sign. If it is up down more than 5%, that little bit concern. And this is a new bull market, should have bulls smiling very soon. I shared this chart in last year May. So we know that in 2012 the market bottomed, and from there like went up like 20% in the month of May in 2023. From there market rallied. I'd like to share a chart on that one, but you can clearly see the average up is 28% when new bull market starts. So on October 2022, so the market went down to the 349 level. From there it went to the 420, like it's almost up 20% in May 2023. In general, when market is bottomed up more than 20% from the bottom, that considers a new bull market. From that new bull market, it went up the 460 and then retested in the last year October. And from October to now, like in the March, in 6 months, it's up almost 25%, like 420 to the 520 level. So it's a huge rally. We saw that on an average it is 28% up a new bull market, but we already up like 25%. So there may be chance of some kind of profit taking, or the sideways can go market. And this is great election year starts. So again, I highlighted the 2012 because that's a first quarter of 12%, and the next quarter is down by 3%, 3.3%. So similarly, now we almost like 10% in the 2024. So let's see this quarter how it's going to be. And this is the enormous 8 2024 total returns. So in this quarter, I already show you in the heat map, like Nvidia is up 82%, Meta is up 37%, Netflix 25%, Amazon 19%, Microsoft 12, S&P 10, S&P 500 10%. So big rally for the mega caps. If you put some money in this in the first quarter, in the January 1st, it went up like anything. Only thing is Apple and Tesla, they hit really hard. Like 11% is big for Apple, and also 30%, nearly 30% of the Tesla. And this great starts, strong finishes. When the first quarter starts strong, it ends very well in the end of the year. So if you see here all the years, it's like when the first quarter is up like 10, more than 10%, the full year is up more than almost like a 15 to 20, or even like on an average 21% up. So I highlighted again 2012 because in all these years, this is the only year, the election year. So it's up 12%, and then it is down. The second quarter, the third quarter is up, and fourth quarter is down, and overall 13% is up. And 2024 we are up at 10%. Let's see what happens in the second quarter. In the election year, April, how the April seasonality is. Dow Jones perform rank is 3, and S&P 500 rank is 3, so they perform well. Russell mid cap also like 2, so that is also perform well. Only Nasdaq is 6, so there is a chance of as we saw that the technology stocks are like anything, so there is a chance of Nasdaq can pull back a little bit here in the month of April. And the S&P 500 election year seasonal pattern 1949 to 2023. A new pattern is added, the red line. So that's the top Q1. So when the first quarter is up, how the next year is going to be in the election year. So the purple line is the pink line is the correct line. So you can clearly see right now we are here. So there is a chance of in the April there is a kind of sideways or a little bit down, and in the May there is a chance of the bottoming here. So the April May there is a kind of downside in the market, and the S&P 500 maximum intra year drawdown. So we know that like just 3 months is over, but just I want to put it like a how bullish the market is. So till now, market is down only one minus 1.70. In the history, it never like more than at least 2.5% is down. So there's a chance market can go down a little bit in the coming months. And this monetary policy condition index versus S&P 500 annual change. So if you see here, monetary policy is very important. The money is coming into the market is very important. So if it is coming up, the market is also going up. Whenever there is a divergence in the market index, monetary index, the market also pulled down. You can clearly see here in 2018 the money monetary policy index came down, and then later the equity market also came down. So sorry, monetary policy is black one, and the market is the red one. So here right now the monetary policy is going down and the market is going up. So there is some kind of divergence in between them. So either monetary policy should catch up the equity market, or the equity market should come down and meet the monetary policy. So, and this is smart versus dumb money. HYG is considered a smart money because this is a high corporate yield bond, and SPY is the equity market. So, when the blue line, if you see the blue line, whenever there is a the high yield bonds went down, so market also equity market also went down in these two cases. But here, when the high yield bond is going sideways, market went up, so some kind of negative divergence, and high yield bonds started going down, then market also went down. So, similar kind of divergence I see here. So high yield bonds is going sideways, and the S&P SPY is going up. So if it's once its high yield comes down, breaks down this channel and goes down, S&P 500 also can go down. Or if it breaks up channel upside, then still the market can go up. But right now, I'm not saying that kind of thing based on the monetary policy we saw in the previous chart. And this is last week economic calendar. So not a major thing. So new home sales came nearly to the estimated forecast is 675,000, actually 662,000. So that's okay. It's not a big drawdown. Durable goods in the orders came 1.4%, forecast is 1, which is good. Previous is minus 6.9, so which is really good in this case. And also the consumer confidence is it came 104.7, forecast is 106.5, which is lesser than the one. And also consumer sentiment here, it came more than expected. So I'm a little bit confused here. What is the consumer confidence, why the consumer sentiment is up and why the consumer confidence is down? So I need a little bit dig on this one. But the GDP forecast came good, like forecast is 3.2, but the actual came in like 3.4%, which is good. And the initial jobless claims also 210,000, but the expected is 214,000. That is also good. And the Friday became the PCE core PC came in line with the market, so there is no major impact on the market. And in the next week we have ADP employment on the Wednesday, and also Jeremy Powell is talking on the Wednesday. He already talked on the PC on the Friday, so I don't see any major changes on the Wednesday as well. And on the Thursday, we'll get the initial jobless claims. So expected is to 210,000. So let's see how it is going to be. And also US non-farm payrolls, US unemployment. This is also really critical to the market. And the crude oil, we saw that PC came on in line with the market, and CPI PPI came worse than expected. So we are from crude oil from 72, it almost hit 84, my resistance level. If it breaks here, then it goes to the 90. If crude oil goes up, then high chance CPI and PPI can go up, and that is not good for the interest rate cuts, or that is not good for the equity market, because the equity market is ran up like anything based on the 3 to 4 or 3 to 6 rate cuts in this year. And this is the S&P. In S&P 500 stocks about 20-day moving average. So I in general look at the 20-day moving average, but today I'm sharing the 200-day moving average because whenever it hit 76 levels, So market took a downturn, but right now we are at 82 level, which is almost like in the January 2020 levels. So whenever it hit here, so the looks like market, I feel like market is frothy. Then there is a chance of profit taking can take place in the market. And this S&P 500 monthly chart, you can clearly see at the 5 months it's going up, but right now little bit the candles are going small with the volume high, and as she says going flat here, but RSA is still going up. So I mean the momentum is still there, but not like crazy. Momentum is still there. So the high I see is 516 is crossed, and the next high in the monthly chart is 535 level. If I draw a Fibonacci level from 480 to the 348 levels, and this is the SPY weekly chart. So when I draw a Fibonacci level 459 to the 408 level, so we hit the 523 level, 2.27 to Fibonacci level, and the RSA is going on the sideways, and the quarter also ends. So whatever the window dressing and the end of the quarter, all the stuff is done. So we are getting into the new quarter, and the first week we know that a lot of new money coming into the market with like a 401k or employee stock exchange programs, all that come into the market in the first couple of days, and then we know that what happens to the market. So as an SPY daily chart, the support and resistance are 57 and 528 levels. This is a blue line is the 20-day moving average. Until and unless the 20-day moving average is broken down by the market, there is no way to the short this market. Market right now it's very strong in the upside. So but the volume is high on the Friday, on Thursday, because it's a long weekend, so there's a chance of profit taking or the sell off happens. It's a very common thing, so I'm not considering that's a big thing. Only thing is if it goes below 515, the 20-day moving average, then that's considered like a kind of market can go down. If it breaks that 523 level, then there is a chance of 535 or 540 levels in the SPY. And it's a QQQ 3 month chart. Out of 5 quarters, only 1 quarter is down. Remaining 4 quarters are really good for the quarter, for the QQQ. We saw that Nvidia and all the mega caps did really well, but there is some kind of negative divergence in the RSI in the 3 month quarterly chart, and the QQQ monthly chart it hit the upper band of the Bollinger Bands. So but and there is a kind of spinning top kind of candle, but not really looks like that, but I mean still needs some kind of confirmation here. So if it goes down, then that can we can take it as a spinning top, otherwise no. And this weekly heat map of the QQQ, so right now it is going in the sideways, and the RSI is going down. This is kind of a negative divergence I can consider. So if it breaks upside, the 451 is the level. If it breaks this distribution level, then the 432 is the next support level. And this IWM weekly chart, it almost came to the 210 level. If it breaks 210 level, 290 is the next level. And the 233 is the ultimate. I mean my target, but it should break that and stay above 210 level. And the next support I see is 200, because we know that it's a break the 210 is like January 2022 level, like almost 2 years it was went sideways. So if it breaks 210, then there's a huge chance it can go to the 233 level, and money may be coming from the technology to the small and mid cap stocks. And also the one of the this is one of the stock I would like to share, the PFE Pfizer. It hit the previous support level 27 level. You can clearly see like from 2014 it never break the 27 level. So it hit that one, and it's a monthly chart. In the monthly chart the RSA is going turning up, and also CSA is going up. So it's a good sign for the bulls. And also the green monthly green candle is good, green candle is good, and also green volume is also good. My support and resistance at 24 and 34 and 43 are the levels. And also there is a huge dark pool came on the Pfizer, so I'm expecting it can go to the 34. First target is 34 and next is 43. And this PMX is also healthcare stock. It's a monthly chart. It's a 200 monthly moving average. It hit previously. It hit here. It's acted as a resistance a couple of times, and again now it hit here. It looks like a support. It took a support and bouncing back. So and CCA is also going up. The volume is high, and also there is a huge dark pool came on this also. So next support I see. I mean next resistance I see a 64. If it goes down, the first one is the support level. And the summer of the days, 2 quarters we had a back-to-back very strong close. So and S&P up 25% in the new bull market. So there is a chance of some kind of profit taking can take place. And also we see that monetary policy index is turned bearish. I mean there is a huge divergence with the monetary policy index with the S&P 500. So there is a chance of S&P 500 can take a little bit downside here. And also smart versus dumb money is showing negative divergence. We saw that HYG high yield corporate bonds is going sideways, S&P is going up. In the past, whenever it happened and high yield bonds broke down the downside, S&P 500 also followed it. So and also big institutions sell when last bit turned into bull. So big institutions in general, JPM or Goldman Sachs, they will sell in the strength at the upside once, or they make it the sideways, like we saw that in the daily charts or the weekly charts. We saw that some kind of sideways. This kind of that I think that's kind of distribution to me. And once the distribution is done, they'll may pull the market down. and be fearful when everyone are greedy. As Warren Buffett says, we saw that market is up last 6 months and like went up 25% up, and we saw that sentiment is greedy and extreme greedy levels. Never it came back to the neutral level. So right now, internals show that some kind of negative divergence, and monetary policy shows the negative divergence. Smart money versus dumb money shows negative divergence. So a little bit cautious here. Don't be. I mean, there's a still market can go up, but be cautious on the long side and be cautious on the don't short now until it break those levels. As I mentioned, sir. I mentioned in the chat. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of your friends looking similar kind of content. Please hit the bell icon so that you'll get notification whenever I upload a new video. Thanks so much. Bye bye.